And let's move on to the markets. The second day of trading this week sees the NSE All-Share Index rebound from losses sustained yesterday. The index ended today's trading session about 0.3% higher, closing at 37,368 points. And this was as a result of gains seen in Forte Oil, Guinness Nigeria, Nigerian breweries, and Bitter Glass. While the laggards today included Cadbury Nigeria, Lafarge Wapco, Ashaka Cement, Unilever. Of course, they reported results recently, also under some pressure as we saw some negative earnings there. And then, of course, Zenith Bank. Consumer goods giants PZ, Cussons, and Unilever reflected contrasting fortunes in their latest earnings releases. And what do these results tell us about the earnings we can expect from other consumer goods? And Kade Tune, Strategy and Business Officer at Diamond Bank, joins me now on the line to talk us through his thoughts about the Nigeria equity market and those results in particular. Thank you so much, Kade, for joining us. So before we talk about those results, we've seen the market bounce back a little bit today. Clearly, we're seeing a lot of interest in the likes of Forte Oil. That's a share that has moved up well over 700% this year. We're also seeing interest in corn oil. So that sector seems to be pretty attractive so far this quarter for investors. Your take on the market's performance?
Yes, Wally. I'm not sure I got your question correctly, but you said something about the market performance for the day?
Yes, I just gave the background that the oil and the petroleum marketing companies are obviously doing very well this quarter, and I wanted to get your take about their performance so far and the broader market.
Okay, fine. Thank you very much, Wally. The sector has really been, the players in that sector have really posted impressive results, especially when you look at the performance of Forte Oil. If you look at the sector holistically, you will find that it's a very thin margin sector. That means that for players to make significant earnings growth, they will need to, as much as possible, diversify their earnings stream and perhaps grow their sales volume significantly. That is what Forte Oil has done in the last 2 or 3 quarters, and that's really telling on their performance. For the sector, I think for players who can show up their earnings by diversifying their product portfolio would really do well going forward.
Well, of course, they're also moving into the power sector, so investors are keeping a close eye on that stock, and of course, Transcore, another investor in the power sector. So let's talk a bit about PZ and Unilever. Contrasting fortunes there. We saw PZ report very positive growth in their Q1 numbers, but on the flip side, we see Unilever reporting some pressure there. We've seen earnings come down about 12%. Your take on those two companies, and what do they tell you about consumer good companies in Nigeria right now?
Well, I think the story about consumer goods is always attractive, given Nigeria's demographic credentials. But when you look at the performance of these quoted companies, I'll take PZ for instance. You will recall that sometime in the last 2 years, the company has struggled with its distribution channels up north, where it has a very strong foothold. It actually came up with earnings warning. I think the slow growth in the top line, about 4% that we saw in this result, means that the company really, I believe the company really hasn't come over that challenge, especially in that region of the country. Particularly when you look at the fact that if you look at the northeastern, maybe Kano, both account for about 20% of consumer expenditure annually in Nigeria. So it is struggling with growing sales in that segment of the market.
All right, and your take on the bottom line, though, because we are seeing relatively strong growth there. Clearly, there are some gains that we're seeing on the cost side in PZ.
Well, I think on the bottom line side, Unilever is also faltering in the sense that we saw a drop in their profit after tax in that result. I think the challenge for Unilever is relatively exposed to exchange rate and input cost variation. If you look at its input cost, about close to half of its input cost is sourced abroad. and that is really impacting its performance. And the volatility in the prices of those commodities is really telling on the company. If you look at their performance in the last 5 quarters, the net margin has actually dropped from around 10% to about 7.7%. So the bottom line is not really looking good for Unilever, and a lot needs to be done to reverse this trend going forward.
All right, but what's your take on the Nigerian consumer right now? If you look at companies like Guinness Nigeria, we're still expecting Nigerian breweries to report, but there's clearly some pressure there, and a lot of people tracing this back to the fuel price hikes in 2012, that the consumer really hasn't recovered from that move. Do you agree with that sentiment?
Well, I think the concerns on the consumer sector is really not far-fetched, in the sense that players struggle to optimize their distribution and synergy across the country, and that's really telling on their bottom line performance. Now, when you look at the distribution channel for most of these companies, you find out that there is a lot of cost headwinds that affect their performance. And you know, the Nigerian market has a tradition of placing a premium, even though these companies may not really do fantastically well on their bottom line. The market places a premium on their valuation, and that's what we are seeing in the market right now. A lot of them look pricey on fundamentals and relative valuation basis.
All right, and a quick view on the banks. We're expecting them to begin to report results for Q3. What are your broad expectations?
Well, I think the banking sector will do well going into Q3, even though when you look at some of the headwinds that the sector has faced in the last quarter and even since the beginning of the year, when you consider the fact that the CBN has really clamped down on the banks and reduced significantly their means of showing up their revenue. But I think if you look at their credit growth to private sector in the third quarter of this year, it went up to around 10% from about 6% in the prior quarter. That tells me that there is strong earnings growth in the sector. And for most banks that will be able to reprice those risk assets profitably, they will do it going into this next quarter.
Right. Well, we are certainly waiting with bated breath to see what the banks report, and I think it's certainly going to set the tone for the rest of the quarter. Thank